for you that's a deal breaker, then obviously you can't use Vanguard. Trading 212, you can invest in everything. I think ETFs, index funds, stocks, probably crypto, whatever, right? It's open season on Trading 212. Now, if you want to compare like for like, what you need to assess, let's assume both Vanguard and Trading 212 are perfect platforms. Operationally, they're good reputation. What is now the deciding factor? The deciding factor is the cost to invest. The cost to invest is the deciding factor. How much does it cost me to invest £1,000 of an S&P 500 index fund? What are the fees attached to that? Vanguard is known as a low-cost platform. Trading 212 is known as a zero commission whatever platform. So look at the fees to invest. Because a lot of time, what kills a lot of people's returns is the fees. Because if your return is 10% and your fees are 2%, very crude example, your return is actually 8%. Versus your return is 10%, your fees are 0.5%. Your return is 9.5%. Look at the fees to invest. Look at the fees to have that platform, if you like, have an account on that platform. Because I think Vanguard, you now pay a quarterly fee or half yearly fee as well. So more or less, I might do a video on this if people are interested. If you're interested in that video comparing different investment platforms, comment down in the comments Vanguard and I'll do a video comparing all the investment platforms. Hopefully that kind of answered your question. Hopefully. Would I recommend Revolut as a broker? I know definitely you can. Obviously, Revolut is a fintech bank app, and you can invest via Revolut. I do have a Revolut account, but I have it because it works when I go to Nigeria, more or less. I don't really keep any money inside. But again, for Revolut, is it insured by the FCA? Okay, so as you can see here, very important. And let me share my screen so you guys don't think I'm just talking shit, right? If you read this, right, it says here, Revolut accounts are not, let me highlight, Revolut accounts are not covered by the 85k FSCS deposit insurance. So Revolut is not insured by the FCA. So when your money there is at risk, obviously they are saying that, Revolut is more or less saying that customer funds are more or less safeguarded in partner banks in case Revolut fails. But again, very important to check. Is the bank or the app you're using insured by the FCA? Is it under the deposit scheme? The deposit insurance scheme. Very, very important because no bank is too big to fail. Not saying Revolut is going to fail, but no bank is too big to fail. So again, make sure the bank you're using is actually insured. Because obviously I'm not saying most people have 85 grand, but even if it's your 5 grand, it's your 1 grand, it's your effing £500, you work for that money. So obviously you want to keep it. So yeah, I was sidetracked, which is the funny part about lives, right? I was sidetracked. Let me close this tab. I was sidetracked. So I was saying, obviously, current account, income, cost, investment account, you're making your investments, and I'll talk about investments in a few minutes. And you have a savings account where you're saving money for a rainy day. Obviously, the goal should be in your savings account or emergency savings is to have enough roughly for 6 months of living and food, which are your more or less your essentials, right? So you want to have 6 months of rent in that account and 6 months of feeding. If you're me, 6 months of feeding is a lot of money because I'm a fat pig. But that's basically how you want to structure your accounts. current investment savings. Now, let's talk about savings. Actually, my wife's calling me. Hello? From Freeport. Okay, I'm on live, so you're on live. Yeah. Okay. Okay. No worries. Bye. Okay. Sorry, I was interrupted. Let's talk about investment account, right? So investment account is obviously, and I'm happy you asked that question about um what broker, how to invest, all that stuff, right? So let's assume you have 1 grand to invest. You have to choose your broker. I've gone over how you go about choosing your broker. You need to look at, it's not as simple as just picking one randomly. Now I get it, people promote free trade, trading 212, all that's fine, right? I'm not saying any of them are bad because I've not looked into them. But you have to pick a broker based on its reputation, based on if it's insured under the deposit scheme we've talked about, based on the fees the broker charges. Very, very important. Like extremely important. Now, how to invest or what do you invest in? And this is where a lot of people go wrong. I've worked in finance for 4 years now. I studied finance undergrad. I did my master's in finance. I've done internships in finance. If investing was super simple, my life would be so much different, and people working in finance, their lives would be so much different. Investing is hard. It's no joke when people say your capital is a risk, your investments can go to zero. And they legit can go to zero. Now, if you want to invest, for most people, being honest, you do not have the financial knowledge to actually pick stocks. Bear that in mind, right? You picking Tesla or you picking, I don't know, what Nike to invest in or picking Apple stock or Google stocks, there's no way you've done any real analysis. You just picked it because your friend said so or you think it's a good company, right? Which is completely fine. All in all, the stock market does go up over time. But for most people, again, I'm not even going to say this is my advice. This is the advice of my friend John C. Bogle. And I'll actually show you guys the exact quote. And John C. Bogle, who wrote he's one of this famous investor. He wrote this book, The Common Sense. This book is a very good book. The Little Book of Common Sense Investing is a very good book. And I would recommend everyone read that book because it will give you guys a good perspective on how to invest. And the biggest advice from the Little Book of Common Sense Investing is most people, you watching this probably, he says invest in a low cost broad market index fund as a long term strategy. You cannot beat the market. You watching this, you can't beat the market. You can't time the market. You can't do any of that. Forex, you can't do it. Don't waste your time. Forex is a scam. You guys should put this in perspective. People have hedge funds, trading floors on banks, solo traders. These people have PhD in math, finance. They're 10 times smarter than your dumb ass. They literally look at markets day in, day out. They have PhDs, masters. They've dedicated their life to finance and they still can't beat the market or time the market. What makes you think you in your fucking flat in South London can beat the market?